All right, get ready to dive deep as we unpack ICI Securities' performance for Q3 of fiscal year 2025.
Yeah, it should be interesting. We've got board meeting outcomes, financial statements, and some pretty thought-provoking questions.
So we've got the official company announcement they're filing to the stock exchanges. Plus, we've got the limited review reports from BSR and Company LLP.
Those are the chartered accountants giving their stamp of approval.
Right. And then, of course, we have the detailed financials themselves, standalone and consolidated.
We always like to have a look at those.
Absolutely. And to top it all off, we've got a set of discussion questions that'll really get us thinking about, the bigger picture.
I'm already fascinated by some of those, just glancing at them.
Yeah, me too.
Mm.
So by the end of this deep dive, you'll have a solid understanding of where ICICI Securities stands today.
And perhaps more importantly, where they might be headed.
Exactly. We'll be looking at the hard numbers, of course.
That have those.
But we'll also zoom out and consider those broader market trends.
The stuff that's really moving the needle.
Right. The potential opportunities, the challenges, the things that investors should be watching closely. Speaking of watching closely, one thing jumped out at me right away.
Oh, yeah.
This proposed delisting scheme.
Oh, yeah, absolutely.
Big deal for sure.
Yeah, that suggests a pretty major strategic shift for the company and could have some, significant implications for shareholders.
For sure. We'll definitely want to unpack that.
We'll get to that. But first, let's set the stage with the overall performance picture. What are the key highlights from Q3?
Well, ICICI Securities had a stellar quarter. Revenue from operations hit $15,856.0 million standalone and $15,859.7 million consolidated.
Those are some serious numbers. How does that compare to the previous year?
We see a significant increase, both in revenue and profit, compared to Q3 of fiscal year 24. They're on an upward trajectory for sure.
So they're making money, but are they financially sound? I always get a little nervous when I see companies taking on more debt.
Well, their debt-to-equity ratio has increased compared to the previous year, which does indicate they're using more debt financing.
However, their strong operating cash flow suggests that they can comfortably manage this debt, at least for now.
Okay, that makes me feel a bit better. Are there any external factors that could impact their ability to manage that debt, though?
Well, you should keep an eye on interest rates. Any significant changes there could affect their finance costs.
Okay, noted. Now, I'm curious about some of the details buried in these reports. What else caught your eye?
Well, the issuance of over 1 million equity shares to employees due to stock option exercises.
Oh, interesting. So they're giving employees a piece of the pie.
It suggests the company is doing well enough to reward employees with ownership.
Yeah, that seems like a good sign for company culture and employee motivation.
Yeah, powerful way to attract and retain talent.
Are there any downsides to that, though?
Well, we have to consider the potential dilution for existing shareholders.
Right. Good point. It's a balancing act. Now, I also noticed they're including results from U.S. subsidiaries.
Interesting.
Are they going global?
It seems that they are expanding their reach beyond India.
Smart move in today's interconnected world.
Opens up potential new markets and revenue streams, for sure.
Absolutely. Okay, so they're growing, they're profitable, but what exactly are they doing to generate all this revenue?
Let's break it down. They have 3 main business segments: treasury broking and distribution, and issuer services and advisory.
Looking at the numbers, it's clear that broking and distribution is their bread and butter. It seems like their brokerage income alone was a whopping $4,625.3 million for the quarter.
It's a lot of brokerage.
It is. What about the other segments?
Yeah, so issuer services and advisory, while it generates less revenue, boasts a remarkably high profit margin.
So they found a profitable niche in that market.
Seems so.
That's smart. They've diversified their revenue streams while maintaining a strong performance overall.
It's working for them.
It is. Let's talk about their financial health in a bit more detail, though. We've got these ratios: debt to equity, debt service coverage, operating margin. How do we make sense of all of this?
These ratios provide valuable insights into a company's financial stability and efficiency.
So it's like a financial checkup.
Exactly. Gives us a snapshot of their overall health.
What's the diagnosis for ICICI Securities?
Well, while their debt-to-equity ratio is increased, which we discussed, their debt service coverage ratio is also very strong. This means they have more than enough cash flow to meet their debt obligations.
That's reassuring. What about their operating margin?
Their operating margin has remained relatively stable, which shows they're controlling costs effectively even as they grow.
Always a good sign.
Definitely.
Okay, so we've got the big picture. They're performing well, they're managing their debt, and they're expanding strategically. Let's dig a little deeper into their financials. What can we learn from their revenue breakdown?
It's always interesting to see how the different pieces of their business contribute to the overall picture.
Absolutely. For instance, their interest income is quite substantial.
Yeah.
6,732.1 million standalone and 6,735.7 million consolidated.
Yeah, that's a big chunk of their revenue.
It is. Remind me, what exactly does interest income represent for a company like ICICI Securities?
Well, it's the money they earn from lending out their own funds or from the investments they hold.
Got it. So they're not just facilitating trades, they're also acting as a lender.
Exactly.
They're making money on both sides of the transaction.
You got it.
Smart. What about their fees and commission income? I imagine that's where their brokerage and distribution activities really shine.
You're right. That category reflects the fees they earn from facilitating trades for clients and commissions from distributing third-party financial products, things like mutual funds and insurance.
Okay, so they're bringing in revenue from various sources, but what about their expenses? Surely a company this size has a lot of overhead.
Of course. Examining their expense breakdown, we see that finance costs represent a significant portion.
Makes sense. That's directly tied to their borrowing activities, like interest payments on loans.
Right. As they take on more debt to finance growth, those finance costs are going to go up.
It's a key factor to watch, right?
Absolutely. If interest rates rise, their finance costs could increase significantly, potentially impacting their profitability.
Okay, I'm making a note of that. What other significant expenses do they have?
Well, employee benefits are a major expense. They also have depreciation and amortization costs, as well as general operating expenses.
Interesting to see how they account for the wear and tear on their assets through depreciation and amortization.
It makes their financial reporting more accurate.
And gives a clearer picture of their true profitability.
Precisely. Now, something that I find particularly intriguing is their other comprehensive income.
Ooh, the hidden treasure chest of financial reporting. What's lurking in there?
Well, this category captures gains and losses that aren't included in net income, but still affect their overall financial position.
Can you give me an example?
Sure, one item we see is the remeasurement of defined employee benefit plans. This reflects changes in the value of pension plans and other retirement benefits offered to employees.
Got it. So even though those changes might not directly impact their profit or loss for the quarter, they still need to be tracked. Why is this remeasurement figure so important?
It gives us a glimpse into future obligations. A large swing in that figure could indicate potential pressure on their profitability down the line.
So we can see not just their current performance, but also potential risks or opportunities down the road.
Exactly. Financial statements tell a story, and sometimes the most important chapters are the ones that haven't been written yet.
Okay, so we've analyzed their revenue streams, we've dissected their expenses, and we've even uncovered some hidden clues in their other comprehensive income. But let's get back to that big looming question, the proposed delisting scheme. What are the potential implications of that?
Well, if successful, it would mean ICICI Securities would no longer be publicly traded on the stock exchanges.
So what would that mean for existing shareholders?
They would be offered a price for their shares, effectively buying them out.
I see. And what about the company itself? What are the potential advantages and disadvantages of going private?
Well, going private could give them more flexibility in their decision-making and free them from the scrutiny and short-term pressures of the public markets.
So they could potentially focus more on long-term strategies without worrying about quarterly earnings reports and stock price fluctuations.
Exactly. However, they would also lose access to public capital markets, making it more difficult to raise funds for future growth.
It's a trade-off then. More control, but potentially less access to capital.
Precisely. It's a major strategic decision with far-reaching implications.
I imagine investors will be watching this very closely. Anything else in these reports that hints at their future direction?
Well, we've touched on their digital transformation initiatives, but it's worth emphasizing how crucial these are for their long-term success. The financial services industry is undergoing a massive shift towards digital apps, and ICICI Securities needs to stay ahead of the curve.
They've already made progress with their online platforms and mobile apps, but are they really keeping pace with the fintech disruptors out there?
That's the question. While they're investing in technology, they also need to be agile and adapt quickly to emerging trends.
It's a fast-paced environment.
Yeah.
And companies that fall behind risk losing market share?
Absolutely. Their ability to innovate and embrace digital will be key to their future growth.
Okay, so we've got potential changes in their corporate structure with the delisting scheme. And we've got this ongoing race to adapt to the digital landscape.
And let's not forget the broader market trends. The financial sector is constantly evolving, with new challenges and opportunities emerging all the time.
Right? Things like regulatory changes, global economic shifts, even geopolitical events, they can all have a ripple effect on companies like ICICI Securities.
It's a complex and dynamic environment, and understanding these broader forces is crucial for assessing their future prospects.
I feel like we've only just scratched the surface here. There's so much to consider, so many moving parts.
And that's what makes analyzing a company like this so fascinating.
Okay, so we've covered a lot of ground. Their financial performance, their business segments, their potential delisting, and the broader market forces at play. But we still have those discussion questions to tackle.
Those questions will help us connect the dots and really think critically about what we've learned.
All right, let's dive into those questions and see what insights we can uncover. Okay, so we spent some time with their financials, we looked at their strategic moves, and now it's time to tackle those thought-provoking discussion questions.
Should be fun?
Yeah, they're like a roadmap to the future of ICICI Securities.
Exactly. Help us kind of think critically about everything we've learned so far.
Okay, let's start with this one. How might market trends in the financial sector impact ICICI Securities' future growth?
Ah, yes. The financial landscape is changing faster than ever.
It really is.
One trend we can't ignore is this increasing adoption of digital technologies.
Right, the fintech revolution.
Exactly. Fintech companies are disrupting traditional financial services, and ICICI Securities needs to stay ahead of the game.
We talked about their digital transformation initiatives earlier, but sometimes I wonder if they're moving fast enough. Are they truly keeping pace with these fintech disruptors?
It's a valid concern. They've made progress, for sure, online platforms, mobile apps, but they need to be agile. Got to keep investing in that cutting-edge technology to remain competitive.
What else should they be focusing on?
Well, another major trend is this growing demand for personalized financial advice.
Yeah, investors want tailored solutions.
Exactly, and ICICI Securities is well-positioned to capitalize on that.
You say they're well positioned, but isn't that space getting incredibly crowded these days? I mean, robo-advisors, all sorts of new fintech startups.
There's definitely increasing competition, but ICI Securities has a distinct advantage. They've got this established expertise in brokerage distribution and advisory services.
So they've got a track record.
They do. They have the knowledge and the resources to provide that personalized guidance that many newer players just can't match.
Okay, that makes sense. It's not just about the technology. It's about combining that tech with human expertise.
It's like human touch.
Exactly. Now, what about the regulatory landscape? We talked about the delisting thing, but are there other regulatory changes on the horizon that they need to be prepared for?
Well, the financial sector is heavily regulated. Always has been.
It has.
And changes in those regulations can have a huge impact.
Yeah.
So ICICI Securities needs to stay informed and adapt quickly to any new rules or requirements.
Right. Got to stay agile, always navigating uncertainty and trying to stay ahead of the curve.
For sure.
Okay, let's dig into their digital transformation efforts in a bit more detail. What are the potential implications of those initiatives?
Their digital transformation is a multifaceted thing. It has the potential to impact their operations, their customer experience, their overall competitiveness.
We touched on their online platforms and mobile apps, but what else are they doing in the digital realm?
Well, they're implementing things like advanced analytics and artificial intelligence.
Oh, wow. Getting fancy.
Yeah, using that to personalize investment recommendations, provide more data-driven insights to their clients.
So it's not just about convenience, it's about leveraging data to provide more value.
Exactly. They're also using technology to streamline their internal processes, reduce costs, improve efficiency.
There's a holistic approach. Okay, so they're investing in both customer-facing and internal technologies. But how do we know if these efforts are actually paying off? What should investors be watching for in the coming quarters?
Well, revenue growth and profitability, those will always be top of mind for investors. They'll want to see continued strong performance, especially as the company navigates these big changes.
Those are the key financial indicators. What about some more qualitative factors? What else should investors be looking at?
Well, keep an eye out for updates on the proposed delisting scheme and its potential implications.
Of course, that's a big one. Anything else?
We'll watch how ICICI Securities continues to innovate and adapt to the changing financial landscape. Are they attracting and retaining top talent? Are they making strategic partnerships or acquisitions? Are they developing new products and services that meet evolving customer needs?
Great points. It's not just about the numbers, it's about understanding the company's overall strategy and their ability to execute.
Exactly. It's a dynamic environment. And those companies that can adapt and innovate will be the ones that thrive.
Well, I feel like we've covered a lot of ground today. Explored ICI Securities' recent performance, delved into those strategic initiatives, and analyzed the key trends shaping their future.
We sure did. We took a good look at their financial statements, deciphered those complex concepts, and considered that big picture of the industry.
We hope you found this deep dive insightful and empowering,
Remember, knowledge is power.
especially when it comes to understanding this world of finance and making informed decisions.
Don't stop here. Continue exploring the source material, do your own research, and stay curious about this ever-evolving world of business and investing.
Until next time, happy diving.